Hey folks, it's Stock Picks by Tim, and I've got 5 stocks for you that I want to get into today. I'm going to touch on senseonics, Volta, Workhorse, Neo, and Bngo, or Bngo. Now if you didn't watch my previous video today, I go into VGX and just look over crypto. I'll leave you guys a card up above or a link in the end screen, and don't forget to check out the links below in the description for some free crypto and stocks. Now let's get started out with senseonics, or SENS. Now first off, with senseonics, we are finding resistance here at about $2. So I want to see us break $2. We did just break out of the 300 MA and we are in somewhat of an uptrend. And it's crazy to think that just a little over 2 weeks ago, this was almost double in price. And about 2 months ago, triple in price. Senseonics has definitely been getting absolutely wrecked over the last couple months. And I definitely think short term, it can kind of stagnate, stay in this lower level, but I see it as a great opportunity to add to my position in senseonics. And let me go over some recent news here. And this is pretty good. We just had news that Essentia, which is Senseonics' partner, just launched eversense's 6-month CGM, or continuous glucose monitoring device, in the US. And I will leave you guys a link below if you want to read this article yourself. Just thought I'd mention it, that they are going to be making revenue very soon from their 6-month system. But I do not think this is going to be reflected in their next earnings, which is probably about a month and a half to 2 months from now. They did just release their earnings about a month ago. So we're likely going to be waiting around 2 months for the next earnings, and we probably won't see revenue from this, or at least not much revenue from this in that quarter. So you're going to have to likely wait a few quarters out until you actually see a nice effect in revenue increase from this product. But I think long term, it's definitely a great time to get in senseonics. And right now, with the way the market's looking so short term at things, any great tailwinds that are about a year out or more even, the market isn't really considering. The market is looking at senseonics and companies like it and judging them based on what they're doing currently, not what they can do in a year, 2 years out. And when we get back into that risk on market, I expect senseonics to quickly rise. Next up is going to be Volta, or VLTA. Now this one definitely has some headwinds in front of it, so just know you're going to likely have to be long term on this as well. But I'll leave this below as well for you. It basically goes into that their future projections for revenue isn't that great, definitely downgraded there. And their next quarter, they actually expect less revenue than they just reported for this one, which was about 12 million. So next quarter, they expect, I think, 8 million, which definitely isn't a positive thing. This is negative. And this is likely to be a headwind for Volta. So I do expect it to stay somewhat stagnant in this price range for quite a while. And looking at the chart, we are still in a downtrend, so keep an eye on this line here, this downward trend line, and we're finding resistance here at the 300 MA. I personally, looking at risk to reward, this is definitely very high risk, but there's also a lot of reward in this. And compared to ChargePoint, that was one I was really watching, and now it's kind of ran up a little bit. I'm kind of holding off on ChargePoint. It's working its way towards 22 last I looked. So I see Volta as a potential better deal, but definitely higher risk than ChargePoint. So if you're willing to take that gamble, I think Volta is a great time to average in. It's near all-time lows. And if you really want to build out a position, I think you will likely have a couple of months to add into your position until we go past the next earnings and see what the numbers are there. So it's definitely going to be a waiting game with Volta. There are definitely a lot of headwinds, such as insiders leaving and lower future projections. So right now, things really aren't looking too great. But if you want to be patient with it, and if you have a somewhat long-term outlook, you could argue that it's definitely worthy of a small position in your portfolio. Next up, I want to look over Workhorse, or Wkhs, real quick. Now this is my high-risk EV play. Now as for Workhorse, you'll see that we broke out of this 470 area, retested it, used it as a base, and bounced right back off of it. And we had a huge day today, up about 12%. Getting towards overbought on the RSI, so be careful there. It might pull back a little bit. Might come down and test this $5 area before bouncing off and pushing further, and potentially breaking this 550 resistance. Now if you're looking for a decent breakout trade, watch out for Workhorse to break that 550 over throughout the week. I do expect it to potentially pull back a little bit, let that RSI reset, let things kind of normalize, establish a base, and then blast off from there. Play that breakout, get in and get out for a scalp. You could even play it on the downside if we break this roughly 450 area and just get in and out on a put. But I do expect this to run quite considerably if we do break 550. Our next area of resistance from there would be roughly 620. So keep an eye on these levels for Workhorse. Definitely still looking bullish though. We are still in a great uptrend. And you gotta love it. Only about a month ago, this was half from where it is now. So it has doubled in just about a month. And it really has been a quite interesting month or two for all those small caps. And I would argue that they still have a lot of juice left in them to run even further. Next up is going to be Bngo, or bionano genomics. And this is going to be my genomic play if you couldn't tell by the name. Now you'll see we're still in this ascending channel here. We've got to break out of our local top of about 284 before we push towards that resistance of 3. But ever since the 17th of March, this thing broke out of the 300 MA and has just been blasting off since. And I would say that it's still definitely worth averaging in when you consider how much money they raised with share dilution back here when it was like in the teens. This company now at its current price, fundamentally, is much better than the company when it was a $12 company. That's irregardless of thinking about market cap. I'm just saying in terms of timeline. This company over here now is way, way better than this company back here. So that's something to think about. And next up, I want to talk about NIO real quick. And this is my only Chinese stock. However, I'd also see Alibaba as a decent choice as well. And I have gotten in and out of some Alibaba trades, also some Li and some Xpeng. Haven't really watched those since I got out of those about a year and a half ago. Now looking at NIO as well, we are still in a nice uptrend and things are still looking very good. We may be due to pull back just a little bit because we are becoming overbought on the RSI. We might pull back, test that $20 area, find some nice support there at 20 before pushing higher and working our way past this 23.90. Now if we don't pull back and we just keep on pushing, I would see this roughly $26 area definitely as a resistance. And once we can break out of that area, we're looking at roughly $28 as our previous support that may become a resistance moving forwards. So if you're patient with this one, I think it's a great time to continue to average in, and I wouldn't necessarily expect this to run up anytime soon, but I do think it's definitely worthy of an average in if you're long term on this. But that's it for you guys, just a quick update on a couple of stocks I haven't talked about in a little while. Don't forget to like and subscribe, and I will see you next time. Wkhs.